Wowee. We're talking about a stock popping off, baby. Chewy today, obviously just reported earnings after hours. This thing's up 10% in after hours trading so far. We'll see where it ends up as of start of day tomorrow. But so far, really nice reaction from investors based off this report. Obviously, this is a company I talk about quite a bit. Really at the forefront of the industry in which they're in. When you're talking about the market for pet supplies online, they're not there really isn't necessarily a go-to name besides Chewy. It's a very big innovator in that aspect, where they were really the first to break away from the traditional brick and mortar retail model, and really there's a lot that they offer that is just convenient to a lot of pet owners. So they've been able to steal a lot of market share away, and we'll see. We'll take a look at the stock today, see what's going on with it. So obviously, massive boost because of an increase in e-commerce over the last year. Stock's up 114%. Was up higher for sure. Found a little bit of a decline, but no worries there. Let's look at these earnings, okay? Quarter four non-GAAP EPS of 11 cents is a beat by 20 cents, and a GAAP EPS of 5 cents beats by 15 cents. Now this, let's just be clear with each other, this is quite incredible. This is absolutely the first profitable quarter I've seen from this company. That's crazy. Now, obviously, this doesn't mean from here on out they're going to be profitable. Just 100%, I could imagine. Most likely next year they still won't even have a full year of profitability. But all things considered, they're going to be darn close is my assumption. I think Q4, obviously, just due to increased business, they were able to see some profitability with an increase in gross margin as well. So really nice to see that, though. Actually, a profitability number there. It's really exciting if you're a shareholder, and I think that's probably why the stock is taking off where it's going. Revenue of $2.04 billion. It's up 51% year over year. Massive growth. It's a beat by $90 million, so not a massive beat, but overall pretty impressive still numbers there. You like to see it. Gross margin at 27.1 versus a consensus of 25.1. So obviously that's why you see profitability there. Better than expected margin. So pretty good. Obviously adjusted EBITDA of $60.8 million compares to the consensus of a negative $800,000 number. So they were going to be darn close to profitability expected in terms of adjusted numbers, but they kind of smashed it out of the parks. Total sales were up 51%. Net sales per active customer rose 3%. Pretty nice there. On a trailing 12-month basis, $372 compared to a $375 consensus. So not quite there in terms of the dollar amount per customer, but not too concerning, all things considered. I do think, you need to consider that I don't necessarily think that the net sales per active customer is that interesting, frankly, mostly because of the fact that some of these customers might not be buying a whole lot, and I personally, as a business owner, would rather have more customers, even if they're not buying more. I'd rather just have more customers than less that are buying more. Obviously, the name exposure is quite significant, and over time, people will introduce other people they know to your business. Now, if you know less people, well, or if you're dealing business with less people, well, less chance of that spread happening. So I'm more into the aspect of increasing customers rather than, obviously, dollars per customer, in my opinion. Obviously, gross margin, we saw that. Pretty nice. Auto ship customer sales were $1.39 billion, representing 68.2% of sales. You may wonder what auto ship is. Well, come on now. You look at it and you're thinking it's some sort of aviation technology. That's not accurate, okay? Auto ship is a very intuitive process in which you set up for a regular delivery of product, whether it be food, pet medicine, anything of the like that you're receiving every single month or on a set time scale that they automatically will bill and ship to you right away. So it's pretty crazy that that's making up 68% of their total net sales. Quite incredible. Obviously, it's a really nice program, and I think it's going to be the future for this company, is that program. They're going to need to keep that up and continue rocking it. Looking ahead, they're expecting $2.11 billion compared to to 2.13 billion. That's versus a consensus of 2.07 billion. So above consensus, that's pretty nice to see there. It's really impressive actually. I don't know. It's quite impressive. Let's look at the press release, see what else we can find. We look at this cute little Boston up top. That's a beautiful dog right there. Boston Terrier's a beautiful dog. Just look at him. He's cute. You know you want him. I do, frankly. Let's be clear with each other. Okay. Net income for the quarter came in at $21 million. Pretty nice. That includes a share-based compensation expense of $24 million. So really, this thing could have come in closer to $50 million. Not too bad. Net margin of 1%. Yeah, that's right. 1%. I said it. Adjusted EBITDA also increased 66 point, let's just say 7 million year over year. I don't want to say that number. That's not okay. For the full year, net sales came in at 7.15 billion, which is a 47% growth year over year. Really impressive growth in that aspect. A gross margin of 25.5%, expanded 190 basis points. But again, net loss did come in at 92.5 million. But obviously 129 of that was in share-based compensation expenses. Quite a bit there. Net margin was negative 1.3 for the year. And adjusted EBITDA was an increase of 166 million year over year, actually. So all things considered, quite an improvement in profitability year over year. So really nice to see from them. There's not much else to this report here, if we're being honest with each other. There's not much left that they got for us. So we like to see that. We like to see it. Ooh, that's pretty fun. Obviously, we got this lovely presentation coming up. Ooh, I don't want to do that. I don't want to subscribe to that. But it's good to see what they're able to do here. It's impressive. Impressive stuff. Let's see if they're able to give me this. We'll look at the 8K here real quick. See if there's anything exciting. I mean, come on now. We love to look at data. See if there's anything we want to see here. I don't know if there necessarily is, but hey, what's going on there? 45 whole pages. Ooh, this is a fun stuff. This is quality stuff. We know this as a shareholder. I don't know if they'll include. Got to double check, see if they included the balance sheet in this one. They may have. Obviously, they talk about the good stuff that's going on here, and it's some good stuff. I told you. Who do you think you are? I am. I knew it was coming. Here you go. Year-over-year comparison, we love to see it. Total current assets on this company coming in at $1.2 billion. That compared to $629 million of the year prior. Quite an increase in inventories, current assets, from cash and cash equivalents, accounts receivable, everything going up on this company in terms of assets. Total assets in general also saw an increase, $1.7 billion compared to $930 million. Quite the increase there. Now, from a liability standpoint, we're seeing $1.38 billion in current liabilities compared to $1.1 billion. So an increase there, but you saw a total current assets increase by quite a bit more. Total liabilities in general at 1.74 compared to 1.33. Again, overall, we saw assets increase by quite a bit more. So you need to understand this is obviously a company working on profitability lines, but I'm actually pretty impressed here with the deficit line. It's actually darn close. This year alone, in a pandemic year, they almost brought in the change here to make this become a stockholder equity on this balance sheet. Deficit only coming in at $2,000. I mean that's not bad. Or $2 million, I should say. Whoopsies. It's $2 million. But all things considered, that's not much for a company of this stature. We're talking about last year they had $403 million in deficit. So Again, accumulated deficit pretty high, at 1.9 billion. And you need to consider that with this company. Obviously, the balance sheet's not quite beautiful, but they made incredible strides this year. They really did. Someone who likes the balance sheet, which I do, you like to look at it. So looking at the valuation of the stock, trading a market cap of 30 after today, probably $35 billion after this 10% increase after hours. Bringing in $7 billion in the last year. Next year, we're probably looking closer to $8 billion. In my opinion, it's probably going to be, I would say, right around $9.5 billion for the full year for them. So you need to consider that how you trade this stock. Again, it's not that incredibly expensive of a market cap for this company compared to what they're able to offer, but you got to consider the lack of profitability, which ideally they'll get closer to next year. But they've made incredible strides on this balance sheet. I think this stock's definitely worth taking a look at, even though it's pretty high in valuation, even after the 10% jump after hours. We're talking about a 52-week high of the stock of $120, and it's sitting at 90, so there's still room to grow. No doubt in this stock. And I think over the long term, this is going to be a dominant company in what it's able to do. So, Chewy, doing really good stuff. I hope you enjoyed this and you have a great day.